Welcome back to WealthWise Academy, your go-to channel for financial education. Today we're diving into one of the most exciting yet intimidating topics for beginners' high-return investment strategies. If you're looking to make your money work harder for you and maximize your returns, you've come to the right place. Before we get started, it's important to remember that while these strategies can lead to high returns, they also come with varying degrees of risk. It's crucial to understand both the rewards and the risks of each strategy. And as always, never invest money you can't afford to lose. No one. Stock market investing. Investing in the stock market is one of the most popular ways to build wealth, but not all stocks are created equal. For high returns, we're refocusing on growth stocks companies that are expected to grow at an above-average rate compared to other businesses in the market. Growth stocks typically reinvest their profits into expanding their business, and as a result, they may not pay dividends. Instead, their value grows as the company increases its earnings and market share. For example, technology companies like Tesla or Amazon have delivered substantial growth over the past decade. According to Forbes, successful growth stock investors look for companies with strong earnings potential, innovative products, and a solid management team. The earlier you can identify a company poised for significant growth, the more potential for high returns. To get started with growth stock investing, begin by researching sectors that are expected to see significant growth in the next few years, like technology, renewable energy, or healthcare. Consider ETFs that focus on high-growth companies such as the ARK Innovation ETF to diversify your investments. 2. Real estate investment. Real estate is another classic high-return investment strategy. But before you start buying properties, know that it doesn't have to involve managing physical properties. Thanks to real estate investment trusts and crowdfunding platforms, beginners can invest in real estate without all the hassle. REITs are companies that own, operate, or finance real estate that produces income. They allow individual investors to pool their money together to invest in large-scale commercial or residential properties. REITs are often high-return investments because they typically offer high dividend yields. For beginners, REITs offer a hands-off way to invest in real estate. They provide exposure to real estate markets without the need to manage properties yourself. Additionally, they often pay monthly or quarterly dividends, which is a great way to generate passive income. To get started with REITs, consider investing in a diversified REIT ETF like the Vanguard Real Estate ETF. Or explore real estate crowdfunding platforms such as Fundrise or Realtimo. 3. Index funds and exchange-traded funds. Index funds and ETFs are investment vehicles that allow you to invest in a wide range of securities, including stocks, bonds, and commodities. Index funds are a type of investment that aims to match the performance of a specific market index, such as the S&P 500. ETFs, on the other hand, are traded on stock markets, and their price movements reflect the underlying value of the assets they hold. Index funds and ETFs offer high returns by providing exposure to a variety of assets, which helps to reduce risk and volatility. They typically have low management fees, making them an affordable option for beginners. To get started, consider low-cost index funds, like the Vanguard Total Stock Market Index Fund, or ETFs, like the SPDRS and P500 ETF. Many financial advisors recommend a strategy called buy and hold with index funds, which can provide consistent returns over time. 4. Dividend investing. Dividend investing is a strategy that involves investing in stocks that pay regular dividends. These are typically companies that have a history of paying dividends to shareholders and have a track record of stable or increasing earnings. The power of dividend investing lies in both the capital, appreciation, and the income generated from dividends. High-quality dividend stocks tend to be more stable than growth stocks, providing a steady income stream even in volatile markets. By reinvesting dividends, you can buy more shares, which then generate even more dividends in the future. Look for companies with a solid track record of increasing dividends, like Coca-Cola, Procter & Gamble, or Johnson & Johnson. You can also use dividend-focused ETFs like the Vanguard Dividend Appreciation ETF to get exposure to high-quality dividend stocks. 5. Peer-to-peer lending. Peer-to-peer. Lending is an alternative investment strategy that allows you to lend money directly to individuals or small businesses through online platforms like Lending Club or Prosper. In return, you receive interest on your loans. To start with P2P lending, choose a platform, create an account, and start investing in loans. Most platforms allow you to filter loans by risk level, borrower credit rating, and interest rate. When deciding how much to invest in P2P lending, start small and diversify your loans across multiple borrowers. Platforms like Lending Club offer automated investing features, making it easier for beginners to spread their risk. And there you have it, the top 5 high-return investment strategies for beginners. Each of these strategies offers a unique approach to growing your wealth, but they come with varying levels of risk and time commitment. If you're new to investing, the most important thing is to take that first step. Start small, diversify your portfolio, and remember that investing is a marathon, not a sprint. Always educate yourself and seek professional advice if needed. If you found this video helpful, please give it a thumbs up, share it with friends, and subscribe for more insights into personal finance and investing. Let us know in the comments which of these strategies you're most excited to try. Thanks for watching WealthWise Academy. Till next time, happy investing.